BlackRock's the company so powerful, it decides whether your boss gets fired, whether your job exists in the first place, and whether or not your industry should be taxed into oblivion or given trillions of dollars in subsidies. And it does that by whispering into the ears of presidents, senators, and congressmen. Now, I know that sounds a little bit dystopian and also like something that is never really going to actually happen, but in reality, BlackRock has become known as that company. They're the $13 trillion puppet master that started getting a lot of attention a couple of years ago, but once again, they're now running under the radar, silently influencing the world and using their power for profit at our expense. And in this video, I'm going to expose what they're now doing, what's actually going on with BlackRock, and why they don't literally control the world, but how they have manipulated your own money against you and used it to capture trillion-dollar industries that have no basis even existing because they're only there to serve BlackRock's profit. Now, there's that growing refrain online that we've all seen recently, right? That BlackRock controls the world, that this one firm owns everything. They own your house and your job and the media and maybe even the government as well. And it sounds a little bit absurd and even a touch conspiratorial when you first hear that. But we're about to see that the spirit of this claim isn't actually that far-fetched at all, and it's not even really hyperbolic at all, despite all of the pro-establishment and globalist shills out there trying to play cover-up for this company. Now, let's start off just with the sheer size of the company. BlackRock currently manages about $13.5 trillion in assets as of October 2025, an incomprehensible sum. That's larger than the GDP of my country, the UK. In fact, it's larger than the GDP of every single country on Earth except the United States and China, and it's almost as big as China's. Now, one company holding that kind of financial power is unprecedented, not just in modern history, not just over the last 5 years or 10 years or 50 years or 100 years, but in human history. And the closest you can get to something like this in the past would only really be either the Dutch East India Company or the British East India Companies, which weren't even really companies. They were state-sanctioned monopolies on trade with militaries, and in reality were just sort of outsourced colonial governments. And even then, neither of those companies controlled as much wealth as BlackRock holds today, despite controlling hundreds of millions of people. So when people say that BlackRock controls the world, they're getting at this, right? BlackRock, they're the largest single shareholder in almost every blue chip company around the world. And it has its fingers in everything from tech to energy to healthcare. If you name almost any company on the S&P or the Nikkei or the FTSE, the odds are that BlackRock is either the single largest shareholder or the second or third, just narrowly behind Vanguard and or just second or third, narrowly sitting behind Vanguard or State Street. And that gives BlackRock a vote, literally, and we're going to get onto that in how these companies run. Now, all of those videos out there that stating BlackRock isn't actually that powerful, that they don't actually control the world, they all seem to fall back on this one very, very simple idea, which is true on the surface, but it really isn't telling the whole story, right? They say that BlackRock don't actually own all of these shares, or that they don't actually own $13.5 trillion in assets. They simply hold on to them for their customers. After all, they're just asset managers. And this is true, right? And BlackRock will be the first ones to correct you if you make a complaint saying that they own the world, because they don't technically own it, they just really control it. They say, we don't own these assets, we just manage them for our clients, and that is true as far as the legal fine print goes. But BlackRock don't need to own those shares to control them, because of those individual shares, right, that make up that $13.5 trillion of wealth, each of them comes with a vote. And when a client or a customer of BlackRock chooses to put their shares or their money in the hands of BlackRock, they're basically giving BlackRock the right to use that vote. And BlackRock votes those shares, in theory, supposedly, on behalf of their clients. So they wield the influence of those trillions in investments, and yes, it is sort of like they own it. They own the voting rights, at least legally. So yes, it's other people's money, but BlackRock decides what that money wants in terms of who the next CEO of a major corporation is, or who's going to be elected to the board of that business's directors, or if a business should prioritize growth or climate change. But why should we really care if BlackRock or any other company like Vanguard or State Street, for example, hold that much power? Well, because it strikes at the heart of how our economies, the US economy, yes, but other economies like the UK and the EU and all the way over into Asia as well, actually function, right? Markets, they're supposed to be competitive, they're supposed to be diverse, they're not supposed to be controlled by just a few individuals, but they're supposed to be a literal makeup of millions of different little tiny decisions made every single second by separate parties, each with different incentives and ideas going on about them, and those little decisions all together come up in aggregate to make a consensus. But BlackRock, along with a couple other companies that we'll talk about in a moment, State Street and Vanguard, they've become sort of the meta company that just sits on top of everything else. And if BlackRock wanted to, and they can, again, we'll get onto this, they can sway the strategic direction of almost every single major corporation through board votes and behind-the-scenes influence. And by extension, they can shape entire industries and economies and countries. And again, this isn't just hypotheticals. This isn't just an idea of what they could do. This is something they have literally done. And again, not 10 years ago, not 5 years ago, but over the last year even, they're still running and using this kind of influence. And I'm going to run you through those examples later on in the video. But the reason this is so important is that we're talking about decisions affecting jobs and prices and inflation and innovation and investment and everything about our lives all being nudged in a certain direction by a corporation that has a very distinct vested interest in using your assets against your interests. Now, to be clear, I'm not saying BlackRock is like this James Bond style villain who's trying to build some giant solar panel in space and blot out the sun to steal energy from everyone else, but they are actually directing policy and moving needles every single day towards things that BlackRock's own shareholders don't actually want and which their customers don't want either. And whatever you want to say or think about BlackRock's intention, the truth is that they do have the power that they are being accused of, and they could at almost a moment's notice decide to get a whole lot more active and basically take full control of everything if they felt it was necessary. But really quickly, I want to talk to you about a new tool that I've been using here on my phone that seriously helped me research for my investments and for videos like this, and it's called Moomoo. It's a powerful all-in-one trading platform, and it's trusted by more than 26 million users around the world, including the United States, Canada, Australia, Japan, and Singapore. Now, Moomoo, they offer $0 commission trades on US stocks, ETFs, and even options. But what I'm even more crazy about with Moomoo is its industry chain feature that allows you to break down companies and potential investments deep down really easily. You just click on the market tabs at the bottom of the app, then the stocks at the top, and then you can scroll down and see the entire industry chain behind a business, who supplies their raw materials, where they operate, what they sell, and who buys from them. Moomoo also have their own AI, which is like ChatGPT but for investors, as it pulls from real-time data. And to make Moomoo even better, you get access to Morningstar reports entirely for free, which used to cost me more than $40 every month, and I've been using for years researching these videos I make on YouTube. Now is the perfect time to start using Moomoo as well, because they're running a crazy new promo for new users where you can earn as much as $1,000 in Nvidia stock just from depositing into a new account, and you can earn 8.1% APY on your invested cash with their cash sweep bonus, which is far higher than most banks. So if you want a free bonus, some free money, more interest paid on your uninvested cash, or just to learn more, click the link down below in the description to learn a little bit more about Moomoo. Now, BlackRock's explosive growth is inseparable from the rise of passive investing. They are literally just an asset manager that focuses on creating index funds or ETFs that track a certain sector or a collection of stocks passively. Go back 40 years and investing meant stock pickers and fancy fund managers trying to beat the market and work out who's going to go up and who's going to go down or crash. But over the last 20 years or so, I'm sure it's not a surprise to you at this point. I've made videos about this myself recently, but there's been a seismic shift of investors flocking into index funds and ETFs that track the market rather than trying to beat it. And BlackRock became basically the pioneer and the cheerleader of this movement and the passive investing bubble that it's created. And unlike BlackRock's almost namesake of Blackstone, they don't actually focus on marketing their funds or convincing potential investors why their fund managers are better or smarter or going to make you more money. They just allow people to invest across an entire economy, an entire sector, an entire industry, or the entire world. and used that advantage. BlackRock on the surface actually here as well give their clients a really good deal. They charge super low fees. iShares are what they're usually labeled as, and they're something like 0.1% per year in fees, or even less sometimes. They can still make a huge profit from that because there really isn't that much in the way of costs for running these funds. And as the passive investing bubble has exploded and it's now the single most popular way to invest, as anyone who's looking to get exposure to a stock market, it's become more and more prevalent that just investing in the S&P 500 alone will pretty much always leave you with more money in your pocket than going with a fancy hedge fund. Everyone knows that active investors lose money compared to the S&P 500 over a long enough time horizon, and BlackRock's customers know this as well, and that's why they've grown so ridiculously fast, because they rode this wave better than anyone else. Now, BlackRock isn't alone here either. There are two other giants in this space too, Vanguard and State Street, and they also grew alongside BlackRock doing the exact same thing, feasting in on this passive investing boom and bubble that's now been created, and now these three titanic asset managers together control such a ridiculously large share of the market that they've been dubbed the big three of asset management. And if you look at the biggest shareholders of almost any publicly traded company, it's almost always those three. Now, the stats here are actually pretty incredible. Collectively, these big three, they oversee around $20 trillion in assets, and they're the largest shareholders in 88% of S&P 500 companies, nearly 9 out of 10 of America's biggest public companies, and one of the big three is almost always the largest shareholder. Now, BlackRock alone is the largest investor in literally dozens of household name corporations. And to top it all off, about 20% of every single share in every single company in the S&P 500 is held by one of those big three, by BlackRock, State Street, or Vanguard. Now, how does this really work, and why are so many people giving BlackRock and these companies their shares to control? Well, the nature of passive investing is that when you buy into an S&P 500 tracker fund, you're not really buying into the S&P 500. You're giving money to BlackRock, and BlackRock are merely pledging to invest that money into the companies in the S&P 500. You don't actually own those shares. You own a share in the fund, and BlackRock own the actual shares. Sure, if BlackRock goes bankrupt, right, they have to pass those shares on to you legally, but in reality, they hold the shares, they control the shares, and in reality, they own the votes as well, whilst you basically just get an IOU and the ability to get your money out if you want it. But BlackRock's influence and power, right, it doesn't just come from the passive investing boom, because BlackRock also have a technology platform that most people don't know about called Aladdin. Now, this is basically a really effective and just useful software. That's literally what it is. BlackRock use it to manage risk and to choose where they should be allocating assets, and Aladdin software is so good at that BlackRock don't just use it themselves, they rent access to Aladdin out to many other financial institutions like insurance companies and banks, and even central banks as well. And these other institutions, they pay BlackRock billions of dollars because they would just fall apart without Aladdin. So BlackRock isn't just managing your money, it's effectively the operating system for a big chunk of the financial world's investments too. And that gives BlackRock a privileged look at global markets and even more influence, or I guess I should say leverage, over other players as well. Now, the truth is here, you've probably personally contributed to BlackRock's power, to their wealth and influence, and BlackRock have probably taken assets that you own and secretly seized control of your shareholder rights and used them against your interests. And all you had to do to enable that, to your own disservice, was to invest into something like a pension fund or to buy an iShares index fund, and suddenly it becomes really clear and much easier for us to understand how BlackRock grew so much for so long with such little scrutiny despite so many of their shady dealings. Now again, one of the main arguments that the defenders of BlackRock are going to use, and in particular go have a look down in the comments because they will be talking about it here as well, is that BlackRock have these voting rights, sure. They technically could use them, but they don't. And for the most part, they just silently observe, and they choose not to involve themselves in the influencing the direction of the companies that they tacitly control. And when they do involve themselves, again, BlackRock are going to claim it's always done for the benefit of BlackRock's customers, of their clients, of the people who actually put the money in the first place, and not BlackRock themselves. But that is instantly proven wrong when you actually look at the facts and when you consider all of the backroom moves that BlackRock is making, which they don't even announce publicly and which we have to dig really, really deep to even get a hint of. Now let's break down the main instrument of BlackRock's control, their ability to vote, their ability to literally say directly how every single company within the S&P 500 should operate. How does it work? Well, when you buy a stock, you're also buying the right to vote at shareholding meetings at a proportionate amount to the quantity of the stock that you own. So when you buy an index fund from BlackRock are the ones who actually go out and buy those stocks, and they're the ones who actually get the ability to vote. Now, BlackRock has what they call their in-house investment stewards, who actually vote those shares and are supposedly thinking of their clients' best interests. And so if there's a vote, say, to elect new directors to a board or to approve a merger or a buyout, well, BlackRock are going to use their votes for their gain. And if you want an example, well, just a couple of years ago, a tiny, and I mean tiny, activist hedge fund called Engine Number One challenged ExxonMobil's board to push for the oil giant towards cleaner energy. Now, these activists, they wanted ExxonMobil, an oil company, to basically prioritize a woke green agenda at the expense of the financial health of the company, at the expense of the wallets of the shareholders of the actual company, and at the expense of BlackRock's customers who, through the S&P 500, owned a load of these shares. Now, Engine Number One, when I said they were small, they were puny, they were tiny. They owned 0.02% of ExxonMobil stock. Normally, that's literally a laughable amount, and for them to suggest anything about the way the business is run, they would just be laughed right out of the room and the board would get back on with just running their business as the best they can. But BlackRock chose to actually prioritize themselves at the expense of their customers, and they sided publicly with Engine Number One. And as Exxon's second largest individual shareholder, they gave a huge amount of weight to the activists, turning what was literally an irrelevant ask into a mainstream topic. And in the end, BlackRock actually voted its stake in favor of Engine Number One's nominees for their new board members, who would push the company towards this woke green agenda, towards this ESG scam, basically, tipping the scales. And they ousted 3 ExxonMobil directors who just wanted the company to make money. They replaced them with 3 green energy directors who thought that Exxon should focus instead as LARPing, as an environmentally clean energy company, and pretend that it wasn't involved in oil. Now, BlackRock's defection was decisive, right? And without BlackRock throwing its weight around, Exxon's management would have easily fended off that challenge and just laughed at Engine Number One in their bit. And this is a perfect example of what can happen with BlackRock and when they throw their weight around. It can effectively, BlackRock that is, fire and hire board members at some of the biggest and most important companies in the world. And whilst this next bit isn't proven, and this is all allegedly from this point onwards, don't sue me, it seems obvious to anyone actually wanting to ask the difficult questions, but allegedly this whole thing started from a genuinely tiny hedge fund making a proposal which BlackRock then supported. Allegedly, though, BlackRock was actually the original force behind this bid, but they really want people to think that they don't use their influence much and they're not actually active in seizing these voting controls from their customers. So they allegedly orchestrated this entire event in order to oust the board members they didn't want and replace them with what basically amounts to puppets for BlackRock. Now, BlackRock's voting power doesn't just influence who sits on board, but also, the policies that a company is going to pursue. And so if BlackRock signals that it wants better climate risk management, or more investment into green energy, or more diverse boards with quotas on how many people of specific ethnicity or gender there are, well, then companies, to ignore that, it's seriously at their peril, right? CEOs, they keenly track what BlackRock cares about, because a thumbs down or a vote or opposition from BlackRock can literally be career ending. And Larry Fink, the CEO and founder of BlackRock, every single year, he writes his annual high-profile letters, which are released to the public and sent directly to CEOs, outlining the expectations that he has on them on things like sustainability and environmental policy and corporate purpose. Now, these letters might as well be curved into stone tablets, they carry that much weight. And in 2020, Fink warned companies to get serious about climate change or face BlackRock's wrath, saying that BlackRock would vote against management and even dump investments in companies that weren't aligning with climate goals. He wrote that climate risk is investment risk, and he announced that BlackRock would exit thermal coal and vote against laggard boards. Now, if you're a normal person who is investing for your future, you just want something relatively safe and reliable that has a good chance of growing in value so that one day, maybe you get the chance to retire and have a little bit of cash in your pocket, right? You're investing into a standard passive investing fund like a BlackRock fund that tracks the S&P 500. You do that because you just want something safe and secure and it seems perfect. But the chances are you will have absolutely no idea whatsoever that actually BlackRock are lying to you. And it's not a passive investment fund because they won't allow any coal investments into the fund regardless of how well they perform. Now, for a fossil fuel company, for their CEO receiving that message from your literal biggest shareholder that they're going to sell all their shares regardless of what the actual investors who put that money into BlackRock want to happen, if you don't change everything about your company, it's like hearing that you are literally under attack. You change right away or you get hit by lightning. And BlackRock, through those supposed stewardship actions, that they've managed to push ESG, environmental, social and governance issues, to the forefront of corporate agendas at the direct cost to the financial future of those companies, harming their earnings, harming their share prices, and making BlackRock's own customers literally poorer. BlackRock are basically, they set de facto policy in boardrooms of all major companies in the Western financial system. But actually, somehow, it gets even worse. And here's the kicker. BlackRock, often enough, they don't even need to formally vote in a shareholder meeting or against the CEO and publicly announce to the world that they have this influence and they're using it. Their leverage is so pervasive and so severe that mere hints or private conversations can do that job. And corporate management teams routinely consult with BlackRock's stewardship advisors to understand what will fly and what won't. But of course, they never actually announce what goes on in those meetings or release minutes, but the balance of power is so ridiculously skewed by BlackRock that we all know if anything is asked for by them, that no sane publicly company could dare say no, or the CEO will just be out of a job. Now, there is a term for this soft power, and it's called jawboning. And in a recent legal tussle, I guess you could say, a group of US state attorney generals basically accused BlackRock and others of colluding on climate initiatives. And it's literally true what they did. The state's lawyers argued that even calling attention to environmental matters by big asset managers, say via signing climate pledges or making public statements, or maybe an annual letter stating any company that doesn't pursue climate policy would be divested from, could pressure companies to change their behavior even without a direct vote, essentially launching some kind of soft coup against the company and taking away, voting rights from the rightful owners of those shares. Basically, if BlackRock even muses that coal companies should cut their output, which is exactly what happened a couple of years ago, then executives do it just to stay in BlackRock's good graces so their share prices don't crash. Now, BlackRock, of course, they deny any wrongdoing with this. They say, and their defense for this is literally that they didn't actually vote in shareholder meetings against any coal companies. But this whole episode illustrates a reality that BlackRock's size makes its voice impossible to ignore, and it can get their results and their aims without resorting to formal shareholder rebellions, without actually going through the voting process, basically subverting the legal democratic processes these companies are built upon, simply because everyone knows that BlackRock could rebel if they're pushed against, and so these CEOs live in fear of this waking giant. But the story, again, gets worse still. BlackRock's power, it isn't even confined to the private sector. It has deeply infiltrated public policy circles and to an extent has the same kind of power over government policy as it holds over corporate policy. Now, sometimes they use this power openly. Sometimes they do it a little more subtly. A glaring example of this was back during the COVID-19 lockdowns and when the financial panic was really hitting in the first half of 2020. Who did the US Federal Reserve call to execute its massive bond buying rescue programs? Was it someone who used to be big in finance but retired so he had no conflicting interests? Or was it maybe a collection of ex-central bankers with loads of experience in this area of policy? No, it was BlackRock. The Fed hired BlackRock to manage tens of billions of dollars in commercial mortgage-backed security purchases on its behalf. In essence, the US government outsourced a chunk of its economic bailout to a private company, one that also manages money for private investors who stood to benefit from those same rescue programs. And the potential conflicts of interest here were so obvious to anyone with eyes to see and ears to hear. But BlackRock's sheer size made it the go-to choice in that crisis for the government. And this was not a one-off either. BlackRock have played a similar role in Europe's debt crisis earlier, and its executives are constantly sitting on advisory boards for central banks and governments all around the world. And by now, BlackRock is so entwined with governments that it's hard to tell where the public sector ends and where BlackRock begins. How did they gain this literal overt control over government policy? They did it through people, through personnel, because personnel are policy, as they say, and BlackRock's people have been walking through that political revolving door in the United States and in Europe and the UK as well at an alarming rate. In the US, when Biden took office in 2021, he filled top posts with BlackRock staff. Biden's head of National Economic Council, Brian Deese, was BlackRock's former global head of sustainable investing. His deputy treasury pick was Wally Adeyemo. He was a former senior advisor to BlackRock's CEO. Another BlackRock executive, Mike Pyle, became chief economic advisor to Vice President Harris. This led to headlines about that BlackRock cabinet, and it sparked a huge amount of criticism against Biden, even from his own Democrat Party. Now, progressive watchdogs and politicians, they sounded the alarms a little bit about that revolving door between, the White House and BlackRock, because the optics really aren't great. You're supposed to have a neutral government crafting financial regulations and economic policy, but at the same time, you have BlackRock insiders at the table helping to decide what's going to go into that legislation. And then when there's a crisis, you give control of that crisis over to the same company, which is going to get rich off managing that crisis. Now, how the hell are you supposed to regulate against something like that when BlackRock has already cemented its influence in your politics? And one of the paradoxes of BlackRock's rise is that despite its size, it's largely avoided the kind of strict oversight that those big banks face, like JP Morgan. And after the 2008 crisis, regulators in the US, they created the concept of systemically important financial institutions. Basically, banks that are too big to fail. Now, they carry extra regulatory scrutiny. These banks and a few insurance companies as well, if they crashed, they would pose such a monumental systemic risk to the entire global economy that they have no choice. The government would have no choice but to bail them out no matter how bad it was. So if you don't regulate these huge institutions, then they'll just take larger and larger risks because the upside is unlimited and the downside is non-existent. They know they'll get bailed out no matter what. So you have to have regulatory pressure making sure that they aren't abusing their power as too big to fail banks. Now, BlackRock, you might expect, controlling $13.5 trillion in assets, more than any other institution in the entire world. Maybe they should probably be one of these strategically important institutions. Well, no, actually, BlackRock is not labeled as one of these SIFIs. They fiercely lobbied against being designated an SIFI, arguing that it's just an asset manager, not a bank taking risky loans, and regulators who were swayed by BlackRock's political clout or the prospect of maybe a $10 million a year job when they want to jump ship and quit their political job, they switch sides, they've mostly just left the company alone. And BlackRock can rock the entire financial system simply by the weight of its holdings, yet it doesn't have to meet the same capital requirements or stress tests that a business or a bank like JP Morgan or Citigroup do. Now, it should be clear at this point just how powerful BlackRock is, but I do just want to go over a couple more examples, not of how BlackRock has power or how it actually plans to gain more power, but of real concrete examples of how it has used its power in the past and its influence to support itself at the expense of the very customers it has a legal fiduciary duty to support. BlackRock back in 2020 found itself being hired by the European Union's executive body to advise them on new environmental banking rules. Now, yes, the EU paid BlackRock, a massive investor in banks and perhaps the single biggest pusher of ESG nonsense in the world, to consult on how banks should manage climate and ESG risks. Now, BlackRock's response was basically, don't worry, we have an advisory arm and we have an investment business, and those two things are very separate and they never touch each other or communicate or anything, so there was absolutely no conflict of interest here at all. But let's be honest, no one here is stupid enough to believe that, instead of course, the regulators who actually put BlackRock in that position of authority. Now, you can bet to any degree of certainty, really, that as a result of that, any regulations that did emerge would have been palatable to BlackRock's interests. And BlackRock itself made BlackRock the poster child for ESG investing, using environmental, social, and governance criteria to guide investments. Basically, not looking at financials, but at social points instead, which are, funnily enough, entirely subjective, and who gets to judge based on those subjective aspects? Well, none other than BlackRock themselves. Larry Fink in recent years, they positioned BlackRock as basically the moral arbiter of corporate responsibility. They were pushing companies to cut carbon emissions, to disclose climate risks, add diversity to boards, and generally just be more socially responsible, which in practice means that BlackRock is voting in favor of more climate disclosures and diversity measures at annual meetings, and sometimes against directors at companies which are deemed to be lagging. BlackRock also updated its voting guidelines in 2021 to say that it wanted US companies to aim for at least 30% board diversity, including at least one director from an underrepresented group. And they warned that they would withhold votes from directors if companies don't shape up. Literally, they stated in no uncertain terms they care more about whether a board member has the right skin color or gender more than whether or not that board member will best serve the interests of their company and, again, BlackRock's actual clients. Now, this is not something most investors want. What most investors want is just financial success. They want dividends, they want share buybacks, they want price increases, they want growth, not diversity quotas forced onto them by a $13.5 trillion institution that hides behind this supposed morality to enforce its will. This is without a doubt activist behavior, and even if BlackRock tried to frame it as long-term risk management, BlackRock themselves have faced huge backlash from many politicians and industry groups who accuse it of pushing this woke agenda and overstepping its mandate. In the US in particular, Republican states like Texas have gone so far as to boycott state infrastructure from investing within BlackRock for boycotting fossil fuel companies. And why does BlackRock push for these ESG policies that make companies and states and people poorer? Because it gives them more soft control and influence over those companies. The diversity hires who are only on the board because BlackRock forced them on, they're going to act in BlackRock's interest, aren't they? Because they're the ones essentially giving them a job. Who gets to decide which companies are good for the environment? Well, BlackRock do, which means they can simply downgrade the social rating of a company who isn't pandering to their interests and replace them with a puppet instead, all in the name of social justice. And finally here, let's talk just for literally 1 minute about self-interest, because BlackRock's bread and butter is passive investing. So it has a vested interest in seeing ever more money flow into index funds, and preferably its own index funds as well. And largely, BlackRock doesn't have to push hard for this, let's be honest, right? The trend towards passive investing is happening very organically. In 2023, actually, passive equity funds globally surpassed active funds in total assets for the first time in history. And in that year, passive funds added an extra $500 billion in net new money, while active funds saw $500 billion in outflows. BlackRock, of course, reaped a huge chunk of those inflows, and now BlackRock executives constantly extol the virtues of passive investing, how it offers low costs and diversification, and they're not shy about marketing that BlackRock's index products are the best choice for investors' dollars. And that might seem a little bit benign, right? They're just pitching their product. Why wouldn't a company do that? But we have to consider the feedback loop it creates and the situation it's left our markets in. The more money that goes into passive investing, the more power concentrates into BlackRock's hands, since passive funds all funnel into those same top holdings where BlackRock already hold huge influence. And BlackRock can then use that growing voting power to influence companies and policies, which might even tilt the playing field towards conditions that favor large index-heavy firms like the AI bubble that we're seeing right now, right? Where 35% of the S&P 500 is made up of just the 7 big AI companies. And the vast majority of the feedback loop which causes that massive spike in AI companies comes from the passive investing bubble. BlackRock officials, they push back at that idea that passive investing hurts markets, but the truth is there, right? There simply is not that much price discovery going on in the markets today, because people don't really buy a stock because it looks good anymore, or because they announced great earnings last quarter, or for the most part, they just do it because it's in an index and they bought a random index fund. BlackRock's influence in boardrooms, in governments, in markets, it adds up to a new kind of power which is center in our world. And it's not a nation state. It's not some democratically accountable body or politician we can vote out of power. It's a private corporation driven by profit, overseen by a handful of executives. And if BlackRock decides to throw its weight behind an idea, it can achieve changes that even world governments struggle to achieve. Voters can't even dream of that kind of power. And the point is that this one company, this unelected, unaccountable company to the public, shouldn't have this kind of leverage over any kind of global affair. It's systemic risk in a political sense, right? Not just the financial systemic risk it also poses, because it isn't one of these SIFIs. Now, we normally worry about these big banks failing, crashing the economy, but here we have to worry about an asset manager steering society in directions that bypass what its own customers actually want. Larry Fink gets to wake up and choose an agenda, and through BlackRock's clout, he just moves mountains to pursue it. And we've seen so far the evil globalist agenda that he's pursued so far.